The NSE 20 sitting at a 23-month low at this point in time. The market cap of the NSE has dropped by about a third this year. Is this keeping you up at night?
It certainly is, and at the moment the market is clearly in disequilibrium. You can see that in the volumes that are trading. There is just no volume in the market. It's become extremely thin and fragile, and therefore we're getting these sharp moves. Shares trade up 10% on 100 shares. It's extremely illiquid, it's fragile, it's in a disequilibrium. The problem is, when does it turn around? And unfortunately, I think it really struggles to turn around until we see some lowering in the interest rate structure, which is currently supporting the shilling.
Now, most analysts are pricing in rates being on hold at Thursday's meeting. Do you think that we could get another surprise and actually see rates being cut, given the tightness in liquidity in the market?
I can't see rates being cut until we see some kind of relaxation in the inflation rate. And I'm not sure when that's exactly going to feed in. But clearly, the economy cannot sustain this interest rate structure for much longer. It's going to cause enormous problems in the real economy. And I think the central bank has got to be fleet of foot, but it's quite a delicate operation. They've got to re-establish their bona fides, which were lost around their monetary policy. And then they've got to move rather quickly when it comes to reducing rates when they can.
In the agricultural sector, we just had some earnings out from Guides for the first half of the year. Operating profit at 26.3 million shillings, basic and diluted earnings per share 1.64 shillings. Were you impressed by these results?
Well, they're quite a curious set of results, and let me tell you why. First of all, the backdrop to this is we've seen the highest average on the Arabica futures since 1977, which was the coffee boom years. That I can remember in Kenya myself. But they've chosen not to take a biological revaluation on their portfolio. And that's why you're seeing these results a little bit poorer than I would have expected. There's no logical reason for them not to do that biological revaluation. And I'm frankly surprised by that.
Going forward, though, the outlook for the agricultural sector, what are your thoughts on that? I mean, we've had a lot of results coming through from the likes of Agricaultural, Tea, Williamson Tea, really robust first half earnings there. Are they going to be able to sustain this positive momentum in earnings?
This is the sweetest of sweetest spots for the tea and coffee estates in Kenya and globally. Prices are in a sweet spot. They're in an uptrend. I think they're pretty bulletproof when it comes to a recession. You've got results being juiced by the weak shilling, and I can't see the shilling returning to levels we saw at the beginning of the year. So I think this trend will continue. So I'm very bullish about this sector, and I think we might see a lot of corporate action if the management are unable to extract a shareholder value, which so far they seem a little bit lackadaisical about doing it.
Yeah. Let's just look at those share prices, as you say, the sweetest of sweetest spots. If you're investing in the agricultural sector, I mean, George Williamson Tea, 285 shillings at this point, a massive rally in October. It's now sitting with a 54% return for 2011. Do you expect it to go much higher from here?
Much higher. It trades on a trading P of 2.7. The forward P is about 2.2. It certainly can't go any lower. The issue around Williamson Tea has been a very poor dividend payout strategy, but the cash formation on the balance sheet is now practically obscene. They have seriously got to look at how they're going to pay that money out. And I think, we're at a tipping point. They can't hold on to this cash any longer, and there's going to be a much more aggressive payout around the dividend, which I think will further ignite the share price to a fairer valuation of a P of around 6 to 10. That gives me uplift in this price of another 100% at the very minimum. And then if you look at things like,
No, continue.
No, and I think this is going to play out across the sector. I read the commentaries for 3 or 4 years. They've been talking about how prices are not sustainable, that prices will come back down. We're in a new normal for tea and coffee prices and for the breakfast commodities. Cocoa came down a great deal, but that was because of a very large position being held by a hedge fund. But if you look at the last 5 years, these are, I think, they're counter-cyclical moves, and I think these are serious breakout moves in the primary commodity prices. And on top of that, these companies are trading at massive discounts
Yeah.
to their net asset values. And I think that is also going to be a catalyst for a further revaluation.
As you say, bullish on the agricultural sector. At the same time, there's a beer war brewing in Kenya. We've just had news this morning that Heineken is now setting up an office in Nairobi. This is SAB Miller continues to solidify its position in the market. You hosted Senia Detu at the latest Mindspeak. What were his thoughts on how they intend to position Eagle on home turf?
Well, he's very bullish. Obviously, Diageo have just slotted him, as you said, $225 million for the unwind of the SAB Miller marriage, which has now been unwound as far as I can see. And I think, they're taking a much more aggressive regional posture. They're commissioning a brewery in Moshi, I believe, today. They're introducing a new canning system, so they're going to sell beer in cans. And he seemed to me to be saying that there was plenty of growth in the region, and he felt that he was well positioned to exploit it. I think SAB Miller, clearly, the amount of competition in this region has increased. But, it remains a sort of very blue sky opportunity. I think, there is enough space for two big competitors. I'm not sure there is enough room for three. And the interesting point Seni made at Mindspeak was that he wasn't going to follow a price, if SAB Miller chose an Airtel approach to their entry into Kenya, he would not follow suit. So I think shareholders will take comfort from that. It looks attractive to me at this price, tends to have a correlation with how Egypt is behaving simply because the big buyers are the Pan-African funds. And so it's been a little bit weak of late, but I think it's headed higher again.
Still that strong correlation to Egypt you're seeing. Looking at the advertising sector, Scan Group, it's down 20% on the year. It's not as much as the NSE 20, but still has been punished. But going forward, advertising spend is expected to rise. They're growing their West African presence. And also WPP is now saying that they want to increase their stake in Scan Group. Just tell us your thoughts on investing in this advertising firm.
I think, it's a very much a WPP type vehicle. It's the same strategy, which is consolidating the small advertising agencies, putting them all together and then going to the big corporates and saying, we've basically got this Pan-African advertising platform, which they have now pretty much built out. I'm bullish about Scan Group. I think, Bharat Thakra has executed extremely well. I think it's a share to buy on pullbacks. I think the advertising spend in sub-Saharan Africa is moving above trend and will continue to be above trend. And I think Bharat and Scan Group have got the largest piece of the pie, and therefore, and are the only listed proxy I can see with which an investor can play this rising trend. So I like it. And I think, WPP increasing its stake is further confirmation of its merits.